Large-cap growth funds are mutual funds that include stocks of big U.S. companies that are expected to grow faster than the market or their peers. They are one of the largest types of mutual funds in terms of market share. They invest in high-growth sectors like consumer goods and IT, but have moderately higher risk. Some examples of large-cap growth funds are Amana Trust Growth, Glenmead Quant US Large Cap GREQ Port, DFA US Large Cap Growth Portfolio, and BNY Mellon Large Cap Securities Fund. Large cap growth funds are attractive for investors who want to benefit from the strong performance of well-established and innovative companies in the U.S. economy. These companies have competitive advantages, loyal customers, and high profitability. They also have the potential to expand their market share and increase their earnings in the future. Large cap growth funds can offer investors diversification, stability, and long-term capital appreciation. However, large-cap growth funds also have some drawbacks. They can be more expensive than other types of funds, as they often charge higher fees and have higher price-to-earnings ratios. They can also be more volatile than value or blend funds, as they are sensitive to changes in market sentiment and economic conditions. They can underperform when growth stocks are out of favor or when interest rates rise. They can also face competition from new entrants or disruptive technologies that can challenge their dominance. Therefore, large-cap growth funds are suitable for investors who have a high risk tolerance, a long-term horizon, and a preference for growth over income. They are not recommended for investors who are looking for low-cost, low-risk, or income-generating funds. Investors should also do their research and compare different large-cap growth funds based on their performance, fees, holdings, and ratings before making a decision. How to choose the best large-cap growth funds for your portfolio? This is a question that many investors face when they want to invest in companies that have a large market capitalization and are expected to grow faster than the average. Large-cap growth funds can offer exposure to some of the most innovative and dominant businesses in the world, such as Apple, Amazon, Google, and Facebook. But not all large-cap growth funds are created equal. Some may perform better than others, depending on various factors such as performance, fees, risk, style, and manager. In this section, we will give you some tips on how to evaluate and compare different large-cap growth funds based on these factors. The first factor to consider is performance. How well has the fund performed in the past, compared to its benchmark and peers? You can look at the fund's returns over different time periods, such as 1 year, 3 years, 5 years, or 10 years. You can also look at how consistent the fund's performance has been over time. Does the fund tend to outperform or underperform in different market conditions? You want to choose a fund that has a track record of delivering strong and steady returns over the long term. The second factor to consider is fees. How much does the fund charge you for investing in it? You can look at the fund's expense ratio, which is the percentage of your assets that the fund deducts every year to cover its operating costs. You can also look at the fund's sales load, which is a commission that you may have to pay when you buy or sell the fund. You want to choose a fund that has low fees, as high fees can eat into your returns over time. The third factor to consider is risk. How much risk does the fund take to achieve its returns? You can look at the fund's standard deviation, which is a measure of how much the fund's returns vary from its average. You can also look at the fund's beta, which is a measure of how sensitive the fund is to changes in the market. You want to choose a fund that has a risk level that matches your risk tolerance and investment goals. The fourth factor to consider is style. What kind of companies does the fund invest in? You can look at the fund's holdings, which are the individual stocks that make up the fund. You can also look at the fund's sector allocation, which is the percentage of the fund's assets that are invested in different industries. You want to choose a fund that has a style that aligns with your investment preferences and expectations. The fifth factor to consider is manager. Who is in charge of managing the fund? You can look at the fund's manager tenure, which is how long the manager has been running the fund. You can also look at the fund's manager performance, which is how well the manager has performed relative to other managers in the same category. You want to choose a fund that has an experienced and skilled manager who can navigate the market and make smart investment decisions. These are some of the tips on how to choose the best large-cap growth funds for your portfolio. By using these factors as guidelines, you can narrow down your options and find a fund that suits your needs and objectives. Remember that investing in large-cap growth funds involves risks and rewards, and you should always do your own research before making any investment decisions. How to invest in large-cap growth funds and win big. You can share some best practices on how to allocate your assets, diversify your holdings, rebalance your portfolio, and monitor your results when investing in large-cap growth funds. Large-cap growth funds are mutual funds that include stocks of big U.S. companies that are expected to grow faster than the market or their peers. They are one of the largest types of mutual funds in terms of market share. They invest in high-growth sectors like consumer goods and IT, but have moderately higher risk. If you want to invest in large-cap growth funds and win big, here are some best practices you can follow. Allocate your assets according to your risk tolerance, time horizon, and financial goals. Large-cap growth funds can be a good choice for long-term investors who can handle some volatility and want exposure to innovative and fast-growing companies. However, they should not be your only investment option. You should also have some allocation to other asset classes like bonds, cash, or value stocks to balance out your risk and return. Diversify your holdings across different large-cap growth funds and sectors. Even though large-cap growth funds invest in big companies, they can still have different styles, strategies, and performance. For example, some funds may focus more on technology stocks, while others may have more exposure to healthcare or consumer discretionary stocks. You should diversify your holdings across different large-cap growth funds and sectors to reduce your concentration risk and benefit from different sources of growth. Rebalance your portfolio periodically to maintain your target asset allocation and diversification. Over time, your portfolio may drift away from your original plan due to market movements and fund performance. For example, if large-cap growth funds outperform other asset classes, they may become a larger portion of your portfolio than you intended. You should rebalance your portfolio periodically by selling some of the overweighted assets and buying some of the underweighted assets. This will help you keep your portfolio aligned with your risk tolerance and financial goals. Monitor your results and adjust your strategy as needed. Investing in large-cap growth funds is not a set-it-and-forget-it strategy. You should monitor your results regularly and compare them with your expectations and benchmarks. You should also review your fund choices and make sure they are still suitable for your objectives and preferences. If there are any changes in the market conditions, fund performance, or your personal situation, you should adjust your strategy accordingly. Investing in large-cap growth funds can be a rewarding way to participate in the growth potential of big U.S. companies. However, it also requires some planning, discipline, and diligence. By following these best practices, you can increase your chances of investing in large-cap growth funds and winning big.